So I can only say this so many ways. Whatever everybody talks about, whatever's widely discussed, is priced in capital market securities prices. It's surprise that moves markets the most. In the last 12 months, unlike the couple of years before that, there's been endless discussion about problems in private credit. Will private credit create the next bear market and recession? I'm gonna tell you, it might contribute to it, but it won't cause it, and I'll tell you how that would work. But the fact that so many talk about it tell you it's already priced. It's better to focus on things everybody doesn't talk about. In fact, bear markets and recessions, when they happen together, business cycle recessions tend to be caused by features we don't talk about, things that surprise us, that are big, powerful, and capable of reducing GDP significantly, but hadn't been noticed and pre-priced. The degree to which everyone talks about private credit takes that out of that category. It's been priced, it's been diminished. Now, that does not mean that when you have a business cycle recession, you won't have a lot of private credit that had been issued to companies that cannot pay off their debt. But there's a point that I've long made, which is, when I say long, I mean decades long. The bear markets tend to start off relatively gentle with volatility, and in their beginning, as they're starting to go down, most people see it as another opportunity to buy the dip. And then they get worse. And then they get worse. The first 2/3 of the drop of a bear market in time tends to only total about 1/3 of the bear market's drop in magnitude, and the last 1/3 of its time tends to constitute about 2/3 of its drop in magnitude. Another way to say that is it gets vicious at the end. And as it gets vicious at the end, that's because the recession's building momentum, and it's causing firms to lose money, and some companies are going bankrupt, and some companies can't pay off their debts. And then that's when private credit would get hit, along with some public credit, because that's what business cycle recessions do. They clean house from the excesses of the prior expansion to build base for the next leg up in the next expansion and subsequent bull market. So with that, you get the fact that, yes, when you get to that last stage, where you're already in recession, you probably have some private credit problems. That'd be normal, whether it's private credit, public credit, either way. The fact is, and I reiterate, that wouldn't be a surprise. It would just be a normal part of a business cycle recession. The fact that so many people talk about private credit now tells you it won't be causal. It will be a reactive later function. Thank you much. I hope you found this useful. I hope it helped your thinking on the topic. Tune in for my next, and I do enjoy these. I hope you do as well. Hi, this is Ken Fisher. Subscribe to the Fisher Investment YouTube channel if you like what you've seen. Click the bell to be notified as soon as we publish new videos.